Alright. The Curious Case of Soda. Alright, SODA. Pick that up on the NASDAQ. SodaStream International Ltd. And check out this super duper stage 2 that SodaStream has been in. Alright. First and foremost, let's go to the monthly candle chart. See that nice consolidation base, explosion, stage 2, topping action. Stage 4, base, stage 1, stage 2, just perfect. And that's on the monthly chart. What I just want to do on the monthly chart right away before we spend some time on the weekly, I want to see where my monthly defined breakout line is. And we have it right here at 950. And my breakdown at about 83.18. Green, green, red. You know that's a top or it's a peak. Red, green. That's a bottom. Or it's a lull, it's a pullback. Right now, this is starting to form out. Price action could go here, here, maybe break out here, break out there. Who knows? But on the monthly candle chart, we're starting to see a ranging action. And this is the outline I see right now. So let's just keep that in notice. And now let's zoom in weekly. All right, this is where it gets juicy, guys. Remember the Ichimoku cloud? If you're under the red cloud, downtrend. Above the green cloud, green trend. 30-week moving average slope, downtrend, uptrend. This is like crystal clear. And what's very, very... Look at that. Patrick, reverse engineer. How? Well, look at the volume candle. Look at these volume candles. You could almost guess all these breakouts. Check it out. This candle... right here. Okay, let's remove Ichimoku cloud, clear that up. Right here. Got a breakout candle right here, this one. This stock really respected. Here, look at this crazy candle. That's like way more than twice the average. Whoa, whoa, whoa. This candle right here, another breakout. Let's remove that alert. So we had a breakout here above the 30-week moving average, above a horizontal breakout line. Breakout candle. Even goes, this one goes, it's a nicer base. Goes out further. There it is. Up. See that pullback here? Within 1 to 3 weeks, 1 month to 3 months, we get a pullback. Small volume, contracting volume. Breakout candle right here. Shrinking volume. Pullback close to the breakdown line or at the breakdown line. That's why you would have put your sell stop a little under. Look at that, another breakout candle. Look at the volume every time. Every time. It's a lot of continuation plays, guys. A lot of continuation. So right here, you would have broken out, have your position, continuation breakout, and another position, continuation breakout, and another position, either on the pullback, or you could have waited for it to break out again. Always above the 30-week moving average, not even touching it. And now you would have been here for a ride, nice ride going up. Zoop. Man, look at this crazy volume candle here. Ooh, that one's scary. Sideways action. And look at that. Decided not to go down. Below 30 average. What do we have here? Another breakout right here. Guys, look at that, man. This is like if you want to teach stage analysis in class. And this was April 2016, June 2016. And he would have been here whole year. Still be in here today again. He would have added on. Another one here. Look at that. It's always like that. It's bursts, and that's what's hard about it, is when you break out, you think it's going to the moon, but what's going to happen after the breakout candle is a pullback. So you get the burst, pulls back, then bursts, pulls back, bursts, and sometimes you get this non-pullback action. No burst, just keeps growing and growing and growing and growing. So this is a type of range. This is what I try to hop on, and usually breakouts build on breakouts and build on breakouts, and eventually you get, it's like that third thrust, and then you're just riding, coasting in space, no gravity, just moving along until you hit some turbulence, and then you have to go through the grind. Consolidation, people selling, burst, and after that, take off. Look at that one. Another did a breakout here. The power of the chart. Zoom in. Didn't quite have the horizontal breakout line right here, but you had that nice volume. So you might not have been able to enter right here. You need the 3 criterias. Twice average volume, horizontal breakout line above the 30-week moving average, and the RSI going up, or the Mansfield indicator. So that's the relative performance of the stock versus its index. Unfortunately, I don't have that for my software. I think you could have some custom indicators on the stockcharts.com, or maybe your software permits you to have that indicator. God, I opened a call with Interactive Brokers. They told me they didn't offer it, so I'm a little blind with that. But I still use the RSI. If it's going upwards from the halfway point, going in upwards territory, for me it's a good sign. Not the triple confirmation that I would require to have the Stan approved triple play. And you see every time going up. Wow, look at that, man. That's like you'd have huge position by now. Never get violated. And except right here, coming really close to 30-week average. The breakout candle, look at the volume. You could almost guess it, guys. Reverse engineer. And look at your charts. See how you could rapidly see how Stan Weinstein Stage analysis applies, guys. If you have stocks behaving like this with explosions of volume, twice the average of the previous 4 or 5 weeks, pretty sure that if you look on the chart, you're going to have that candle going up through that resistance right there above the 30 moving average. And now, volume picking up on a down candle, just like this one here. Could be an indication of a sideways move, and that's where we are here today. RSI taking a breather. Wow, beautiful. Just beautiful. Would I have had my trend line? Let's say here. Stan says 3 points for a valid trend line, and then you exit on the fourth on the break. 1. Hold on. What? I don't want an arrow. I want a good old-fashioned trend line. 1, 2, 3, 4. Yeah. So a violation of the trend line, you'd be out. The angle is not too steep. It's like the 30-week moving average. And if ever the 30-week moving average is violated, you would get out also. You'd move your sell stops along the way below the laws, the pullbacks, and when the price action goes back up, your sell stop would have been here under these pullbacks. So there's a lot of exit points. If you want to see the selling process, I encourage you to look at the early Secretwars episodes, the long ones, 20, 30-minute ones. And I go in detail with a lot of examples, how I'd move my sell stops up, how I'd exit on trendline violations, the investor's way, the trader's way, as Stan talks in his book. So go check that out. And that's where we are today, guys. This is the monthly defined breakout line. So if I get a trigger above this and I get a monthly close, June monthly close above that, we could be looking at a monthly defined breakout to the going upwards, and that's the confirms the wind that's going to push the price up, protect you from potential whipsaws or corrections that become reversals on the weekly, on the smaller time frames. And here's a monthly defined breakdown. Any close below that, we could be sticking around the stage 3, maybe going to stage 4, but we're not quite there yet. The volume has been shrinking. That's the way you want it. After this little dump here. So guys, this is got to keep an eye on this one. SodaStream. You're close either way. Get ready maybe for a nice continuation breakout. Bounce off the 30-week moving average like it just did here on this candle. Looking sweet, right? So SodaStream in the stage 2, still stage 2, prepping for a stage 2 continuation breakout. That's the closest scenario I see right now. And hopefully we'll get to repeat history, guys, like it did all these other times on the way. Just beautiful, guys. I don't know who's been playing Soda for a while, but let me know if you've seen these moves along the way while you were in that stock, guys. All right? All right, Soda. See you soon. Ciao.